The Labour government just released the first budget since July 2024 elections.
This government was given a mandate to restore stability to our economy and to begin a decade of national renewal.
We discussed 8 important tax changes, including child benefit charge, employer national insurance contribution.
We will abolish the non-dom tax regime.
The Labour government just released the first budget since July 2024 elections after in opposition for 14 years.
Their failure to assess the scale of the challenges facing our public services means that this budget raises taxes by £40 billion.
While there are few positives like doubling the employment allowance and simplifying non-dom rules, they have also introduced a series of tax increases, and they argue that these changes are necessary to fill 22 billion gap left by previous Conservative government. Before going into this video, I understand you have already watched my pension series. All of the videos are up here, so if you haven't watched, so please do watch. And I understand I recently started tax planning series, and last week I published my first video on the UK system to understand the UK system and how the UK system works in terms of tax planning and tax compliance, and how many different types of taxes are working in the UK economy. But the last week UK government announced this budget, so I feel I should post this a kind of analysis, a little bit of understanding like what they have changed in the current budget. And last time I already posted my spring budget, so the video is up here, so hopefully you will also watch that, and definitely let me know what your thoughts are on the UK budget. In today's video, I'm going to break down 8 most important changes in tax that you must know if you are an accountant or a tax advisor, or even you are just a general public, because these changes directly impact you on your wealth and on your day-to-day operation, and obviously it will also help the net disposable income you will take your home. Number 1 is child benefit. In the last budget, Conservatives, they increased the child benefit income threshold from £50,000 to £60,000 a year, and with an extendable taper amount of £80,000. However, Labour in this budget changed plan to move to a household-based system for the high-income child benefit charge. To change the calculations to joint household income will no longer go ahead. Instead, Labour government is planning to invest £4 million in HMRC IT system to improve compliance, and from 2025, HMRC will allow employed individual to pay the high-income child benefit charge through their tax code. Number 2 is employer national insurance contribution. Labour has increased employer national insurance contribution from 13.8% to 15%, and to counter the effect, they have also increased employment allowance from £5,000 to £10,500. One major development in NI section is they have reduced national insurance threshold from £9,100 to just £5,000, which will definitely impact for small businesses tax planning. Now let's talk about non-dom and inheritance tax. Current remittance basis rules will be abolished for non-doms from 6 April 2025 and switched to a system based on tax residence. So what they change is from April 2025, the system will give arrivals to the UK 100% relief on foreign income and gains in the first 4 years of tax residence in the UK. Plus, additional condition they have added is the person who is coming to the UK should not be a resident in the UK for any period over the 10 years prior to entering the country, and anyone who does not qualify for this must pay tax only of foreign income and gains. But it does not stop here. Chancellor Richard Reeves also introduced inheritance tax for non-dom on their worldwide assets after 10-year period in the UK. This means that foreigners resident in the UK for 10 years will be fully exposed to IST, including those that settled trust that were IST exempt under current law. Next, we have immediate change in capital gain tax rates. The lower and higher rates of tax will be changed from 30 October 2024, which will result in a higher sales transaction and receive a higher collection of tax for government. There are two rates of CGT. The low rate of 10% will rise to 18% and higher rate of 20% will rise to 24%. In addition to this, which has also increased business asset disposal relief from 10% to 14% from 6 April 2025 and then from 14% to 18% from 6 April 2026. Moving to number 5 point, which is inheritance tax on pension pots. Pension pots will be brought into the inheritance tax for the very first time, removing some very favorable tax planning options from 6 April 2027. This will remove the opportunity for individuals to use pension as a vehicle for inheritance tax planning. On top of this, they also freeze IST thresholds of 325,000 to 2030, which means until 2030, IST threshold will stay same, and after that, it will in line with inflation rate. Number 6 is increase in HMRC interest rates. Under current system, interest rate on late payment to HMRC is 7.5%, which is 2.5% over and above Bank of England rate. And under current proposal, they increase from 2.5% to 4% over and above Bank of interest rate from 6 April 2025. Number 7 is income tax threshold. In 2021, Conservatives freeze income tax threshold of £12,570 to 2028 tax year. However, Rachel proposed that they are defroze this from 2028-29 tax year, which means that personal allowance and national insurance contribution threshold will increase in line with inflation from 2028-29 tax year. And finally, the Chancellor has not wasted any time increasing stamp duty for second home owners, buy-to-let properties and companies buying residential properties with higher rate of 5% from 3%, enforced from 31st October 2024. So overall, we discussed 8 important tax changes, including child benefit charge, employer national insurance contribution, capital gain tax, inheritance tax on non-dom, putting a pension into inheritance tax, increase in HMRC interest rates, and finally, stamp duty on residential properties or buying a second home. So if you guys found this video very helpful or any of my previous videos, please do like and do subscribe my channel, and don't forget to post or comment below in the section. And I would appreciate that if you share my videos, either this one or any of the previous videos, with your friends and families or any of your colleagues. That would be a big thank you for me. So as always, hand ahead salute until the next video.